Hey guys, good morning and welcome to the Camp Financial Stock Market Update for July 26, 2016. And we're going to jump right in today and talk about a recent purchase acquisition in the S&P 500, and that was Linear Technology yesterday, getting a buyout bid from Analog Devices. But I don't want to just talk about, I guess, what the buyout and where the stock popped to. We'll get to that. But I also want to mention the trend on this one, right? So, as most of you know, I have an accounting background, so I definitely understand the financials. And can read the financials and get a pretty good idea of what a stock is worth. I can definitely analyze from the financial side and with a mathematics background. It helps me to look at technicals and understand. Now, really, technicals are more not so much mathematical, but more psychologically driven. Usually when a stock's going up, it's going to continue to go up because people see it going up, and then they buy more, or and they buy in, or something. But usually when a stock's headed up, it continues to run for psychological reasons as well. So with that, I'm looking at Linear Technology, and it's interesting, right? So in January, it hit a low, probably around, I'm guessing, looks like $37 a share roughly. Then it came up and it crossed its 20-day moving average in late January at a little over 40. Crossed the 50-day at roughly 42 in mid-February, and then in March, right at the early part of March, it crossed the 200-day moving average in the 43.5 range roughly. But since then, all three moving averages have been headed north. The stocks led the moving averages, other than a slight pullback in late June, but it never actually crossed the 200-day. It dropped below the 20-day and the 50-day, and then from there, so the stocks run from around $40 a share. It had run up to in the $48 range before it got a buyout bid, and the stock popped all the way to $62.50 yesterday. So I guess just what I'm trying to get at with that is, understanding the technicals, knowing the psychology of it. You could have bought in, well back when it crossed that 200-day moving average at $44. You'd have made $18 on the trade, and then gotten out with a pretty hefty gain right there. So that's the big news, really, in the S&P 500 yesterday, which was basically flat. Started off the day, went up a few points, then by 11 o'clock it was down 6 or 7 points, and then it ended up up 0.03%. The Dow Jones ended up down 0.1%, and the NASDAQ up 0.24%. Looking at the heat index, basic materials and technology were good. Consumer goods and utilities performed poorly yesterday. So with that, let's go ahead and jump into the S&P 500. And let's look at our laggards in the S&P 500 yesterday. So the bottom five in the S&P 500, Centene Corp, the healthcare plan, Gilead Sciences, Tegna, Under Armour, and McDonald's. Interesting to me, So you've got Gilead, which is, pretty much the leader in biotech as far as historically. Seeing them sell off, as well as Under Armour and McDonald's, both selling off with that, is pretty important to me. Specifically Gilead and McDonald's. Under Armour obviously not as big as Nike yet, but that goes kind of to show where we're starting to see some activity, with the big names selling off. A lot of the big names selling off like that. Gilead was down 8.5%, McDonald's down 4.5%, Under Armour down 5%. And that starts to make me concerned a little bit with where the stock market may be going from here. I know the S&P 500 held pretty much flat, but that's some big names and some large market caps and historically market drivers that definitely felt some serious pain yesterday. So we already talked about Linear Technology getting the big bid. Their stock obviously popped. It was up 29% yesterday. Texas Instruments, Wynn Resorts, Avery Dennison Corporation, and Microchip Technology. So a lot of the semiconductors performed in line with Linear Technology. Obviously, there's the other tech stocks took off with it, and Wynn Resorts put out a very good number yesterday, and there's definitely some positive outlook for them going forward with where the economy's at right now. So let's hop over to the Dow. So in the Dow 30, obviously, I've already mentioned McDonald's and the S&P. So McDonald's was the laggard of all of the Dow stocks, followed by Verizon, Coke, Nike, and 3M. A lot of the, staples, a lot of the historically stronger companies down yesterday. Verizon, obviously won in the telecom service, down 2%, but they, with their hefty dividend, they've been leading the market for quite some time as people have been looking for dividend yield. So important to notice, probably just a pullback, just a short-term thing that they're going to pull back a little bit. They've made a pretty good run. They're up $6 at 50. When they were at $56, they were up $6 since the beginning of June. So that's about a 12% gain. Probably some profit taking there. And let's look who performed the best. So the top performers were our industrial goods businesses: Caterpillar, United Technologies, Boeing, and then Intel, obviously in the tech side, and JP Morgan Chase. If you saw the Chase report last week, I think Chase is probably, they definitely appear to be the strongest bank out there, not just by market cap, but just they're doing the right things. They're still making money even in the tough interest rate environment that they face. As interest rates go up, my guess is their profits are going to run with it. So Chase is probably a good one to be in there. But it's telling that the industrial goods were strong. Although United Technologies and Boeing are more defense oriented, Caterpillar would be the type of company you would see perform well when economies are expanding. So there appears to be some expansion thoughts out there right now, and a lot of that's driven by the central banks giving away free money to the government. So, as I've said in the past, you can't fight the Fed, you can't fight central banks. So, you can't fight can't fight what's going on in the system. As long as you understand why things are going the way they are, you can ride along with them, and just be prepared to get out when things start to shake up. So so I want to take a look. So 14 of the 30 were up yesterday, so basically a flat day, which coincides with exactly what the market did. So that is it for today, guys. If you have any questions, you send me an email, chrism@campfinancial.net. Leave me a message here on YouTube or on my Facebook. You can find me, Chris Mielek, or on Twitter @CMielik. Thanks, guys, and we'll see you tomorrow.